Yeah, because I was looking at GJ and GU,
Mm-hmm.
and I feel like they still have more room to go up.
I see.
And now when I'm looking at GP CAD, seems like it broke a resistance.
And it's retesting it, like GU, like
Yeah, yeah,
pause
yeah,
trade, right?
yeah, exactly. All right, so your JPY 1 hour made a resistance over here. Let's look on the daily. Ooh, daily is rejecting a high. Okay, 4 hour. I had your JPY buys. I had your JPY buys around, I think it was 118,786 for Asian session. Because
Oh, so you won that trade.
yeah, because it made support here in New York, broke down, then before Asian Open, like the 7:30 candle, closed
Huh?
back above the support, and then I took a buy. I took a buy actually till 118,900. And then 2 hours later, I see price, and price is just at like 119,450, and I'm like, wow.
Did you leave a runner?
No, I didn't leave a runner. I
Oh
did
well, you won.
not.
You still won the trade.
Yeah, that was good.
That's a nice little like.
Yep.
I wouldn't like. That's good to know that you could like how you entered and why you entered.
Yeah. So now EJ is coming back down into some sort of support, and this was resistance on the 1st of August, all throughout, New York close, made a support right before pre-London. Now you gotta wait how this candle acts. If this candle stays bearish, I think it's coming down to 118,900.
See, Raki, I'm waiting. I'm hoping that 4 hour candle right there closes below that resistance. You know.
Yeah, I'm actually waiting. I'm waiting for it to. I mean, I'm looking at GJ and I'm looking at all the ABP pairs right now, and I'm really hoping for them to make some sort of support on the 15-minute, so that I can take buys and we can go back up.
Got you.
That's what I'm basically looking at. So 4 hour, yeah, this 4 hour close is gonna matter.
It could, and guys, also, since it's not really a huge bullish momentum run, it's just a couple of candles going bullish. It might be a fake out too. If it closes back in the range, let's just drop. Like I said, I entered a little too early, but I wanted to catch the whole move this time. Like I said, I got a tight stop loss. See, my stop loss is that support right there, Rakio.
This one?
You go up to the next candle, go up to the left, 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 go up. Go up. You see that's no, the one below it, that candle below, like that support right there where your cursor is. That's my stop loss.
Oh,
but
nice.
in my head, I'm not really in it.
Yeah. If I'm looking at.
Gold actually is pretty awesome because now we got support at 1460 and we got resistance at 1474. So it's actually like a super nice range, and you can basically play 1460 to probably 1467, and then if we break 1467, 1467 all the way back to 1474.
Like those are the resistances of that little move we had.
Yeah, so that's what, like, I was so happy that we did that huge correction, because when it just keeps going up like that, it's too hard to figure out where your ranges are, right? Because where does it stop? And that's why, like, I always close my positions early, because you saw what happened yesterday. It went 1474 and then it went right back down to 1460, right? So basically, if you were in any trade yesterday, you wiped out your entire profits.
Yes.
And now you're starting again from ground zero. So it like, this is where, when people talk about scalping, they turn around and they're like, oh, scalping's no good. But now I'm double dipping because you're in the same position that you've been in the last 3 days, and I'm coming back in to get it again.
So 1466 is a possible range that we can look up to.
Yeah.
Usually when gold looks up, usually it's kind of relevant when it comes down.
Yeah, I'll wait till 8 o'clock for gold, unless it starts to move in the next hour, which it potentially could move to 1466 in the next hour, but I don't know. I want to see how the next hour forms. If it comes back down to 1460, if it pulls back a bit before it goes up.
This
But
hour.
yeah. Sorry, go.
Oh no, I was just gonna say this hour close is gonna be the key, because now when I'm looking on the 15-minute, this looks perfect.
Yeah, exactly. That's what I was looking at as well. And if you look at the daily structure, that daily candle could flip.
Wow, okay, he's going up.
I just don't like the daily structure is bearish. So that means at any given time we can pull back again. It's very hard for gold when it does these kind of bearish moves for it to go bullish. It's very rare that we see gold go bullish on the daily with this kind of candle on the daily. That's the only thing that I worry about, and that's the one thing that I notice with gold. Like about 90% of the time, if the daily is bearish, the rest of the day will be bearish. You'll get bullish moves, but the overall momentum will be bearish.
Mm-hmm.
So that's what I'm very cautious of right now. Like, because you might have another test of this support at 1460 before we drive up, and today might just be the breather. So we'll see what the market gives. We're sort of sitting back.
Oh, nice trade there, Alex.
Yo, coach is not done yet. It's very this is a key level right here, like you said.
Yeah, that's awesome, because if this closes here, which it is,
Fake out.
yeah, exactly. This move would be a fake out.
Hopefully, from your mouth to Santa's ears.
Yeah.
See, like this is why I try to up my lots, because with my lot size, 10 pips ain't shit. Feel me? But if I'm like you guys, like you and 10 or whatever, like you mostly, 10 pips is a lot, bro. You know. So, but you know, baby steps.
Yeah, but what happens if you lose?
Oh, then you lose more.
Right. See, like it's a good example of people's thought process is I'm not making enough, but you're also not losing a lot, right? So your thought process is skewed. You shouldn't always be worried about how much am I going to be making. You should be worried about how much could I possibly lose, because all you're doing is you're manifesting the fact that every time you're going to enter a trade, you're going to have a great trade and it's going to go really well. Whereas what I would be doing is I'd be watching to make sure that I was not risking something that I can't afford.
So I got in a buy on gold. Basically, the idea is broke this resistance here. This candle closed bullish. So as long as this current candle stays above the oh shit, fuck.
Yeah, no, I was about to say the first 5 minutes of this candle is gonna crush us.
Oh man.
Yeah, no, you got don't get hoodwinked by gold when it does that break.
Kind of like traded it. You try to trade it within that range.
That's so stupid. Actually, well, I'm still in it now. I'm in its stop loss, so basically, I'm just expecting it to go up.
You should be okay if it holds that support. I just have a feeling it may tap down a little bit lower before we get that move. That's all.
Son of a bitch.
Because the 850 or the 655 candle that 7 a.m. candle was the continuation of the last hour. It wasn't the new hour candle because we need a wick. That's why I just was watching it because I was about to do the same thing and then I saw it and on the 1 minute and I was like, oh, I've seen this happen before. Yeah, but it's good because now what you can do is you can place buys above that previous pullback. So right where you have that pullback, yeah, right at 1465.64, buy stops. So when it flies up, you'll catch it.
$32
Nice.
baby. See, guys, like, okay, I don't want to. I'm just speaking my mind here. Like, if I was trading Rakio sizes, I would have closed already, but I'm not. You know what I'm saying? But in my head, I did. You feel me?
You gotta close then.
Yeah, but okay, so Alex, when you're trading those positions and you're having them run deep and you're profiting, why don't you turn around and add to those positions?
I feel like that would be greed, and it's gonna bite me in the butt. That's how I think. You know, like, oh man, I should just be grateful because the minute I let me add positions and then let me get more money, then he takes over there, bro. I don't know.
Okay. Just seems you're caught in.
And usually, and Ted usually like, well, this past week I would do something like that, Ted. If I was trading like the trend and we found a support going up, then I would enter another position. But lately, or how I've been getting my money last week was trading this range. There's no such thing as like breaking and retest between like in a range, you know. So it's hard for me to guess or like to put multiple positions, you know, on a ranging market.
Yeah, but you don't have to guess. Once you're in profit, you can just allot a portion of that profit to a new position and increase your lot size. So if you're up $100 or $20 as an example,
okay,
you can then and you're trading say a 10-cent lot or whatever. You can then add a 20-cent lot and have a $10 stop loss on that 20-cent lot. So you're basically taking a portion of your profits to try and increase your profits.
Yes, I'm gonna do that.
And then if that position starts to pull back and you're not comfortable with it, you can just close. You've lost some of your profits, but you haven't hurt yourself. You're still in profits overall. It's just the position that you got in didn't work out like the new position. You're just scaling in more positions. That's all. Yeah, a lot of people don't realize that you can scale in positions. If you're in profit already and it's almost, it's a deep trade and you believe it's going to run further to your take profit or whatever, scale in a bigger lot size. I mean, you've now built the cushion with your profits to allow you to trade a bigger position risk-free. Like people are worried about sort of risk management, but it's not risk management when you have profit. All you're doing is you're reducing the amount of profit you could possibly obtain. Or if it does go your way, you're increasing your profit. You're not hurting your risk management by adding positions when you're already in profit. Like it's because you haven't taken anything out of your original capital. All you're doing is you're playing with house money. So all you're doing is you're pressing house money, and you just have to be aware of the fact that if you're pressing house money, that you could end up losing all of it. Yes. But that's when you do the calculation and you say, okay, if I'm $30 in profit, I'm willing to risk $10 of that $30 with a bigger position because I know we're continuing to run in the same direction.
Like Rakil, if this, I'm sorry to keep bringing it up. If this GCAD does do what we were talking about the fake out and retest, this would be a perfect time to add another position, correct?
Yes, and then you'd be leveraging out the profits from your first position. Like, let's say
Yes.
if that's still open.
Perfect.
Yeah, so sometimes, like, what I do is, if let's say my position goes in profits, like let's say 15 pips, I'm gonna put stop at break even, and then if I'm gonna open another one, then I'm gonna put the stop of that position on the entry of the first one, so that if it does all retraces, I come out with break even. But if it continues down, then I'm basically compounding.
Wow. Okay. Thank you.
Yeah, so that's the chance you're taking there.
Looks like hopefully it stays that way.
Yeah, it looks like it's gonna continue to drop
Wait,
there.
but don't be fooled, because this could be pre-New York hype.
Yeah, no, I think this can continue down because your JPY is also, it's very, very bearish. It could come down straight to 118,900. Oh, gold has activated the buy stop. Oh shit, still running.
Nice.
Yeah.
Thank you, Jay, for that, bro.
No, you're welcome, man. Pleasure, bro.
Oh, nice, Rakil. Let's see. But didn't Ted tell you that you're jumping the gun, bro?
No, I had a buy stop.
Yeah, I had a buy stop as well. My buy stop
Oh.
just got activated.
Yes.
I'm gonna close at 8 pips.
Nice.
Oh, there we go.
Oh.
Done. That's 10. That's 10 pips.
10 pips. My hit.
Gold is a monster.
Yeah. Oh.
Wow.
Nicely done.
That's it. I closed right there.
Hey guys, you wanna see?
Wow, they gold.
At 1467.
You wanna see my lawn, guys?
1466. Yeah.
Beautiful.
Hey Raja, you wanna see my lawn?
No, I don't. We're doing some important work right now.
What?
It's okay, you go. Your TP got hair, hit man.
Oh, dang.
That's awesome.
Did he say you want to see my lawn?
Yeah. Oh, that's awesome. Yeah.
My MT5 got stuck and he's talking about his lawn. I'm like, whoa, I'm gonna get out of these positions. I don't want to see no lawn. Yeah, that was very nice. Got like 11 pips out of it.
Thanks, guys. Good job.
Yeah, it's probably going to break out. But the thing I was also worried about is this breakout might also just push up, and then the New York Open, we might have a huge pullback again. So I think we're in a good position with the hour candle, because the hour candle should push up a little bit more. But I'm not liking just the structure right now. So I think if you're in the position and you got to the target, like that was our target, like 1467.
Yeah.
We said that's what it was. You might find it might push up a little bit more. So if you're in positions, I mean, obviously manage your top loss accordingly. But I think for the most part, just because it pulled back, it's just just mapping out your targets, right? Because now we're coming into huge traffic on the 15-minute and even on the hourly. Like if you go to the hourly chart, you'll see there's huge traffic right now with gold. Like you're in this here, and that's why I was targeting this area here, because I know we would probably push up, but you have to now figure out like how are we going to react in this area here, right? So it was just I wanted the initial push because I knew that we were going to hit this zone here. Once again, it's targeting your trades and figuring out where price is going to push to, and understand where you need to be. So the fact that we've come here, now you have a decision to make. You either close at this area here, or you continue to hold. And then what you'll end up doing is you end up putting like your stop loss over here in profits. And now you have to say, I'm willing to accept this gain because I didn't want to close, because I want to close up over here, as an example. That's how you have to play that trade. You can't turn around and say, well, I'm just going to have my stop loss at break even, and then hope that it goes up. And it's like, no, you have to take profit because you don't know what's going to happen with this candle. And if you're holding for the long term, your stop loss has to be below here then. Those are the options. If you're playing just this candle here, you have to take profit on this candle. If you're playing a long-term move, your stop loss has to be below here then. You have to make the choice within this candle and decide, what do I want? Do I want just this? Or if I want up here, I have to then accept risk, because you can't place your stop here and then expect it to go up here. It doesn't work that way, because this candle can pull all the way back into this zone here and then push up. So you're gonna get stopped out if you put your stop loss here. Well, you're not probably going to get stopped out over here, and if you do get stopped over here, it's because it's going back down to 1460. That's how you play stop losses. You play stop losses in ways that you're not going to get stopped out, and if you do, you're getting stopped out because the candles are moving a different direction. So just keep that in mind.
Yeah. See, look at that.
And that happened because of the new 30-minute candle.
Nice, Raquel. Did you close it on gold?
Yeah.
Like you closed it in profit, right? You didn't close when it was in the loss?
Oh no, like I did 4 times that close.
Oh,
The bill only goes for like 10, 15 pips. And
Yeah,
that's
because it came up to this 1467, and if you look left, it had rejected before, so it just made no sense like for me to hold it. Right, because it came up, saw the area to the left. Oh, perfect, exit.
Nice clean move. Trade was mapped out. Take the position and call it a day.
yep.
Now I use my profits and I hunt other trades.
Can you go to the GCAD hourly? So if this hour candle closes within that range talking about, like there, should I place? Would that be a good time to place sells and my stop loss above this wick of the 1 hour?
Yeah, I'm kind of looking at this too. I mean, the only way I can maybe explain that is that maybe a sell is going to work if this current 30-minute candle closes bearish.
That's what, yeah, okay.
Yeah, then you can say, okay, you know what? We came down, closed back here, and the 30-minute candle now closed below this area, which now, gives more evidence that, okay, we should be continuing down.
Yeah, this close is key.
Yeah, exactly. The only thing I'm looking on GJ is the support was made. This candle broke down, closing back in the range. This move out could be a fake out, and then essentially it's going to play out, breaking above. Oh shit!
DJ.
Let's go. DJ, yeah.
What
There you
the
go.
fuck?
Yeah, he's just going to break out, man. GJ.
DJ, let's get it. Oh, that WicksDontLie, true. It's gonna hit the 800.
Yeah, GJ made me some change here.
The really delayed move on GCAD. Okay.
There could be a fake out. Watch out.
Ted, did you ever find yourself entering trades early in a trade? Yep, check my Instagram.
Where are you reading these questions?
On the YouTube channel.
Oh,
So I have a question that is kind of for me, but more so for newer traders. When you started, Ted, when you were recording in your journal, let's say the setups you won on more than you was lost on, like your better setups that you won more. Did you only look for those, or were you trying to always find more setups that you won on, or would you kind of wait till you see the setup you won on previously?
Well, as a progression of as a trader, what you'll find is the setups that you're winning more frequently. What you'll be doing is you'll be dissecting those setups to the fact that you'll be able to pinpoint with greater accuracy. So suddenly those become more setups, but they're permutations of the original idea. So when we first started working back in 2015, 2016, we were looking at 4-hour charts only. We were only trading off the 4-hour charts, and we were doing support and resistance off of 4 hours. That idea then scaled down all the way to like the hour chart, the 30-minute chart, the 15-minute chart, and the 5-minute charts. So now the same idea from the higher levels, we've just scaled into the smaller time frames. But in the smaller time frames, they present more opportunities because we've gotten better with how we understand candle movement, timing of the market, timing of the session, where you're taking trades, where you're exiting trades. So you're able to take more opportunities, but you're still just using the same sort of idea. So all I did was I refined my approach. I can trade off a 5-minute candle, I can trade off an hour candle. It's just now I'm looking for a specific range or I'm looking for a specific target based on the timing of the market. So where I am in the session, what do I believe that's going to happen for the rest of the day? How does the previous set of candles look? What have we been doing for the last week? All those things are put into perspective when I'm trading off of an hour candle or a 15-minute candle. It's like the trade Rakil took with gold. I knew that 5-minute candle, for the most part, there's a high percentage of times that the 5-minute candle, the first one of the hour after 6 a.m. into 7 a.m. is going to be a huge pullback because the 6:55 candle usually pushes, and then the 7:05, the 7 o'clock candle will give you one small little push and then pull all the way back. But that doesn't mean the move's dead. It just means that we have to wait for the candle to reset. And what I mean by resetting is creating a bottom wick, because most gold candles have wicks on the bottom if they're moving up and wicks on the top if they're moving down. So I'm always looking to make sure that we have some sort of wick. It's very rare that we have a candle that has no wick, and if you do, then it's an anomaly. And obviously, you're not always going to catch that, but for the most part, each candle will have a wick from the bottom to pull liquidity to go further up. So with gold, obviously, your stop loss has to be a little bit wider if you want, but also the moves are a little bit more impulsive. So you'll get, I know I'll get 5 or 10 pips within 1 or 2 minutes of trading that, and that's all I need. I'm not holding any extra time because within 2 minutes after that, we can have a full reversal, and that messes you up totally because now you've lost that trade.
Okay.
Ted, I remember you did talk about those wicks on one of your Sunday webinars. So true. Even though you explained it on the charts, I remember that.
Yeah, because if you look at gold right now, gold has dropped all the way down to 1463. So if you're holding that trade that we were already in, you're done, you're toast. And that is the biggest problem that people have, is they don't understand the characteristics of the pair that they're trading, and they think that holding a 40 or 50 pip drawdown, hoping that gold's going to reverse now and go up to 1474 is the smart thing to do, when it wasn't, because we already knew coming into the session, and based on the discussions that we've had before we actually looked at taking a trade, that it was going to be a rocky morning. We knew that already. Why did we know that already? Because the last 3 or 4 days, gold has been trending hard in a bullish direction. There needs to be some sort of exhaustion or some sort of breather. So when we're taking trades knowing that we have a huge rejection from 1474 and now we're only at 1463, that's a 100 pip move. We know that it's going to struggle today. It's not going to just fly right back up to 1474 because it did it already. And now what you're going to see is going to pull back a bit. And today it might just range until we find legs again, maybe tomorrow or Thursday. It's just, a lot of times people don't put those ideas together. They don't holistically look at the charts as a continuous movement. As, okay, we've caught the top of the move. There has to be a correction to pull back down, and then it will continue in trend. What they'll do is they'll take buys today, and gold will probably rip down to 1460, and they'll say, well, I don't understand why I keep getting stopped out with gold. It's because you're not looking at the pair that you're trading from a 500-foot level. You're looking at it from just today, saying, well, you know, I found support at 1460, so it shouldn't break 1460 support. Well, what if it does? Like that's what happens. Well, how do you know if it's going to do that? You don't know that it's going to do that, but you can look at the chart and you can see if we've rejected 1470, 1465, chances are we're probably not going back up there today. If we do, great. But if we don't, we know to stay away from this pair until we get a little bit more confluence to say, hey, support is being held and it's not being retested at 1460 for the next few hours. We can then take trades going back up. But once again, if 1460 holds, we know that we're probably going to the upside. So now you can start putting a buy stop in at 1464, knowing that future we're going all the way back up, and your buy stop at 1464 probably won't get hit, or 1465, wherever you want to put it today. If we drop down to 1460, you know that today's candle is going to be bearish and that there's going to be a little bit of relief in terms of price, and that tomorrow we should continue further up because there's been no change in the economics or the fundamentals of gold. There's been no news reports to say that China and US have, you know, come to an agreement with tariffs, you know, that the stock market is improving, that Trump is now a good person. Like, we've never heard any of that. So until those things come out, safe havens will be where people are going to be putting their money.
I'm learning to trade for 1 year now, spending 10 hours a day to learn to practice trading the sense and reviewing what's good. I think you need to lower down the time of the amount of time you spend on the charts. I mean, from 10 hours to lower it down to like 3 or 4 hours. I spend like maybe 3 hours actively watching the charts. That's it. Just 3 hours, because you have to treat it like you're like a part-time job, you know. That's like when you go to the gym. Like, you want muscles like me tomorrow, but you know it's going to take you time, you know. Maybe it's going to take you like 4 or 5 months, right? But you're not going to go to the gym and stay there for 4 or 5 hours to get the muscles. No, it's going to take time. So you're going to go there for an hour. Trading is the same way. You're going to spend maybe 2 or 3 hours a day watching the charts at the same time every day, and then over time you're going to start to identify the same patterns that occur over and over again. Because, like, if you've been here since 6:30 a.m., you would have noticed that we talked about, okay, you know, 7 a.m. pullback, because then there's the New York Open at 8 a.m. So that's where we might see a push. Oh, just pushing. You know, so it's important to set the time you look at the charts. Well, look what we do, right? Like, for the last year, we've been coming to the streams in the morning for New York every day for maybe 3 or 4 hours. So that time we spent, like, some people have been with us for like since we started, you know, and I'm pretty sure, 100% sure, that they have really seen some sort of moves happening at certain times of this session, right? So then it gets easier and easier. But if you're looking at charts all day long, then that gets a little hard. For GU to go bullish, I guess if I would try to take a buy on GU, I would wait for the 30-minute candle to close bullish at least. So that, yeah. Because then if it's going to head up, right, so then you want the next one to stay above the low of the previous one. So in a way, it's going to make a higher low. You know, so the next candle should look something like this. Next candle should look something like this, with this wick, probably like this, but shouldn't go below this low.
Uh-oh, imaginary candle.
Yeah. So see what this is? This is a low here, and this is a higher low, right? Higher low, and then the next candle would be something like this. This will be another higher low. So what do higher lows and higher lows means? Uptrend, right? Uptrend. Higher lows. High, higher low. Higher high, higher low. Higher high, higher low. This is an uptrend. So then you want the same thing to be seen in the candles, right? So this candle would be the trade. If this 30-minute candle closes bullish.
Yep.
What trade are you in? GJPYs?
Yeah.
Oh yeah, it makes sense. I was looking at the same thing here, but then I said, well, I already took trades, so I'm just going to wait because this was support right here. This candle broke down. This had to do a retest, but it closed back above support. So now if this candle is coming down, it should retest this level and then continue up.
Yep.
Because,
bullish fake out.
Yeah. Bearish. Because if this is a bearish
Yeah.
fake out, there's a 70% chance that price is going to continue up and break this resistance.
I see fake out.
Yeah. So your stop, I think, your stop should be at, I think, 129.470. 129.470 is a good stop loss.
Let's see how it plays out.
Yeah, I'm also on DJ drawdowns. I hope it plays out the same.
Well, let's take a look at candles here, right? When we look at the 4-hour candle is bearish. It just went bearish. 1-hour candle is bearish. 30-minute candle is bearish. 15-minute candle is bearish. 5-minute candle is bearish. 1-minute candle is bearish. So I mean, I would say maybe wait for at least a 15-minute candle to close bullish so that you have something on your side, because it's good to have nice entries, but at the same time, when all candles are bearish, there's a high chance it's going to continue that way. So at least wait for at least 15-minute candles to turn bullish.
If you're watching gold on the 15-minute, we might have a continued push up to retest that upper area again.
1467.
Yeah, so if this candle goes bullish, you might find that you have an opportunity to go back up to 1467.
Ooh.
BuyStop to 1465.50. This is so much better than Mixer. Yes, because we have a lot of people here today.
What if there's no retest above that zone? There's no entry then on that other, like what Rukil was saying earlier too. I mean, if there's just no entry, so you miss the trade and you move on to the next opportunity. The idea behind trading is not to get every opportunity. The idea behind each opportunity is to see what makes the best sense for you to take a trade. Don't worry about every opportunity. Worry about the opportunity that you can find that makes sense to you. The only thing I don't like about gold is the hour time frame. We have to push past that huge wick that we created last time, the last hour. That wick that pulled down and pulled back up now on the hour time frame. That's the only thing that I'm watching.
Oh yeah.
That's the only thing that I'm watching. Is the only reason why I'm watching this is because of this here, that it keeps tapping into that zone. Because this is now like a zone, and it just keeps tapping into that. So that's the only thing that I'm watching. Because if it bursts through that, then you're good. It's just if it doesn't, then there's no trade. If you're already in a trade, then it's fine, because you're just going to play around that zone. But I mean, ideally, your entry would have been good, like right over here. Like up over here, if you're taking trades, that's scary because you're entering that zone. So you have to just be aware. You might almost wait until you sort of get over to here and then take trades to go up to here. Yep, that's the push we needed for gold. If we can hold above 1465.30, we should be good then to go further up to 1467. If you're in a trade right now with gold, your target should be around 1467, and then evaluate at that point once it gets to 1467. but we need to hold above 1465. I would be very cautious. If we break below 1465, we have issues. But if we're above 1465, I think we're good to go to 1467. And then from 1467, after 1467, we have a clear path all the way up to 1469. So 1465, 1467, 1469 are your target levels. So if we get to 1467, we have the next target at 1469, and then from that point we will be able to go all the way back up to 1474. So something to keep in mind. So if this hourly candle on gold pulls into 1466, you're in a good position. Next hour, if you were to take a position with gold, if you haven't entered yet, what I'd be waiting for is I'd be waiting for the pullback and then taking a position to go above that level. But I'm hoping that this candle now pushes all the way up to 1467. We should have a move with gold right now to 1467 in the next 30 minutes. That is what I'm predicting. Because once we get into 1466, that'll be a clear path to 1467. 1466 should be very, very quick. We should get to 1466.90 very quick if we get to 1466. So if this holds, if we're right now we're holding like at 1465.30, 1465.30 range. If this holds, then yes, we will go all the way to 1467. So we have to wait to see. The 15-minute candle is still forming in this new half hour. So we'll have to see if this candle flips bullish as well. Right now it's creating a wick. When trading gold, do you use DXY as extra confirms? No. I don't use any of that other stuff. All I'm looking is to see that support is being held on the 15-minute chart. If support is held on the 15-minute chart, then we should be good to go further up. Because what that's doing is that's creating a step up to the next level. And then if you look on the 15-minute chart, your next level push up is to 1466.90. That's where you'd be targeting on the 15-minute chart. So you should be able to see right now on your 15-minute chart support being held at 1464.45 or 1464.69. So basically 1465 if you want to, be a little bit. It's a little bit easier for you to see that. If that holds, your range on the 15-minute should go to 1466.62. That should be your range. So you can see here, this is where we're aiming for. This is our first target. This wick should fill this area here. Now, if it breaks above, then we're coming into these areas here. And then you can say, okay, my next target is this area here, if we break above. If we fail to break, you have a decision to make at this point. Once you get to this area here, you can probably either take profit or move your stop and say, okay, I'm going to move my stop now because I believe the next hour will continue up, and then maybe the next hour candle only ends up doing this afterwards. The next hour candle is here. So this candle pulls back down, right? So that's why I'm saying if you map out your targets on your smaller time frames, you can turn around and then just take easy profits and then close that trade at that point. So like right now, we're in 1466 territory, but I'm also watching the current time of the 15-minute candle. We have one 5-minute candle left. So now we've hit our first target. We've basically hit where we need to be. This is where you determine, you can say, hey, I'm closing my trade, or I'm going to let this one run. So what I've done now is I'm going to close this trade with 18 pips profit because I don't want to hold it past this 15-minute candle because we made it to my 15-minute zone, right? And you can see we're coming to the hourly zone. So at this point here, this is where you close because that was your original target. If you don't want to close, now you have to move your stop loss and you have to figure out where am I comfortable with my trade at that point. Because now this is, because this is where you're going to get the trouble. You're going to turn around and say, okay, well, I think it's going to go up to here, and then it'll spike up, and then it'll rip all the way back down, and then you lost all your profits with gold. Because gold moves way too fast. And you can see what's happening here. This candle here is approaching this major zone that we hit in the last hour, and we rejected it. So that's why I'm scared. If this candle had closed bullish, I would have been happier holding this further, knowing that we tapped it originally and this candle closed bullish. So now we were filling that wick to go up. But because it closed bearish, I worry about this level here. And I think that we could reject that and push back down again. If we don't, I know that I can take a trade here and that my next take profit could be right over here. So I can enter in over here and then take profit up over here. I don't have to worry about fighting through this zone here. Alternatively, if I took a trade and I entered over here, my stop loss, I can be right over here and I can ride this wave now through. So you have multiple ways to trade, but you can see exactly what happened. It's rejecting that point there. So that's the reason why I'm looking at that. And the reason why we're rejecting is because of the fact that we're coming to the end of the 15-minute candle. So this is a new 5-minute candle that's pulling back into that area. So that's why I'm very cautious that once we hit this point here, that's your exit. So like right now, you're getting opportunities to close. It's giving you a chance to get out. If you want to hold. But if you've taken a trade from here up to here, that is your trade. That's your opportunity, because essentially you had no drawdown. If you look at your 15-minute charts, there was literally no drawdown. It was maybe 1 pip, you know. Ted, am I right in thinking? Well, I'm looking at the 15-minute candles. As I said, if the 15-minute candle holds its support, then I'm taking the trade, right? Because I know that we have to go back up on the 15-minute. We know we have to go back up to here, because you can see on the 15-minute chart, that's the rejection area. So think about when you're trading, think about the logic progression. If the market's moving bullish, where's our first target going to be? More than likely, the first target's going to be directly to the left of us, right? Because we're returning to a fresh area. So when you're mapping out your trades, you can be like, hey, chances are we're going here on the smaller time frames. And then when you look on the higher time frames, it adds up too, because then you say the zone that Rakil has open on the hour chart here is the same rejection area on the 15-minute. So we know that we're just returning to that area. So it's a very simple trade, and you don't have to worry about it, because you can say to yourself, hey, once I get close to that zone, or once I get to that rejection point, I can close, because that was the target. Because if you look at the rest of your chart, the next target is probably up at 1469. But we know we don't have enough power to get there because the hour candle's not closing strong enough. And this is where people make mistakes, is people will turn around and take these trades, but they're not aware of the candles doing the job that they're supposed to be doing. The 15-minute candle is only 15 minutes. When you start coming to the end of the 15-minute candle, you have to start evaluating where that candle is finishing. Because you know that when it approaches that 15-minute zone, that was the target for that price. So whether it, in that 15-minute span, so we had a 15-minute candle, we're closing right now on the 15-minute candle. You can see, and you can look at the 5-minute candles, and you can look at the 1-minute candles, and you can see where it drives to reach that 15-minute zone. Once it taps that 15-minute zone, the trade is dead. That's it. Whether it takes 5 minutes to get to that zone, 1 minute to take that zone, or 14 minutes to get to that zone, that's your target. You have to accept the fact that when you hit that target, that's done. Because the next candle, all it's going to do is it's going to reset. And now you've missed that opportunity, and it's going to start again. Now, if you miss the opportunity, you can turn back and say to yourself, okay, well, as long as we don't break support, we should continue back up there. But this was your trade because you mapped it out in that particular time frame. You have to accept the fact that that's your take profit point, that's it. If it blows by it, great. But there's thousands of times that it won't blow by it. And this is just from my experience. This is from me trading every day, doing the same fucking thing every single day. I can tell you with almost 90% accuracy when it's going to do it, why it's going to do it. And then people turn around and they hold the trade and it fucks them. Of course it fucks you, because you know what? You didn't understand the dynamics of what you were doing. You didn't understand why that was the target. That was the target because we could see how the rejection of price was happening on that higher time frame. So you know that it's going to go back to that level. But when it goes back to that level or near it, you need to get out. You need to leave the trade, because you can see on the hour time frame, it's not healthy. There's nothing happening there. And then you look to yourself and you say, okay, well, why is there a rejection there? Because we've been having trouble all morning hitting that. And we know that in this session, if we were going to drive past that with gold, that last 15-minute candle would have plowed right through 1467. It would have gone through that 1467 zone in 1 5-minute candle, because we've seen that tendency with gold or with any pair that when it goes to a zone, if it's going to drive through it, you're going to have a gladiator candle, which is that huge candle that just pushes right through every zone and it creates a new level. So if we were to push through that level, what you would have seen is this candle would have gone right into here. It would have smashed right through here, and it would have pulled back to this point here. It would have pulled back over here. So it would have gone back down to here. But it didn't. It came to this level here, and it pulled back into this level here. So you know that that's a major area, that this is a major zone right now, all this area here. So you know that, hey, let's let it bounce around. But once support is created over here, if we have a support that's created over here and a candle comes, the new hour candle comes and starts to do this, right? And we see that this wick over here is now higher than this wick over here and this wick over here, that more than likely now probability increases that we're going to break through that zone, and you can start taking trades to say, hey, we have liquidity down at the bottom of this area and we're starting to push through the zone, so I can start taking trades over here or over here, knowing that we're going to drive through here. But I still have to maintain my stops below this, because at this point we could say, hey, this rejection now means that we're going back down here and we're retesting 1460. But you have to be able to understand that, and you have to use confluence, and you have to say to yourself, okay, there's lots of rejection here, but now what is happening in that point? Okay, and you have to understand that. So as you turn around and you start trading, the next level, once we break above this shaded area, then you know that, you know, there's going to be support. So these will be your wicks, and your candles will start, you know, rejecting over here, because this will be your previous zone that it's tapping into to then drive eventually to this point here. That's going to be your ultimate goal. But what you're doing is you're breaking down each level. You're breaking down this level, you're breaking down this level. Why is it this level? Because of this, and then eventually this level here. So you get this step up, right? Because that's essentially what's happening right now. If you look at the charts, what's happening? Step up, probably step up, step up, step up, right? So each one of these levels is creating a support, right? We're creating support everywhere we go. So this is a new one that hasn't formed yet, because we don't have candles in, we don't have candles that look like this yet. We don't have candles in this direction here yet. We don't have them here, because what we have is we have candles reaching the top of this resistance area here. Okay, so that's essentially what you're doing, and that's how you're managing that in terms of your trades. But you can see once again that this would probably be your hour support, so that, you know, the next candle on the 9 o'clock candle could probably pull down here and drive further up. So you can have a rejection down here. So that's good for us as traders, because what we can say is, as we come to the hour close, if the hour close is bullish, we know that there could be a rejection here, and then this candle goes up, and more importantly, this candle here will get filled. The wick will get filled, and that's where you might have that drive then to go up through that area. But we don't have to worry about that, because now you can place buys potentially over here, or if you want to be super safe, up over here, and just let it run back to that level there, because essentially what you're doing is you're saying this. I'm sorry, I'm gonna get a better color here. So what you're saying is you're saying this dropped down to support. This was our resistance level, and now we're coming back to go back up to that level there. So this, you basically came up. So we went up here, came back down here, and now we're driving right back up here because why? Overall momentum is bullish, right? But we have to be aware that, we've had a lot of runs with bullish momentum, so it's going to be a little bit of a struggle there. So just keep that in mind, but that's how you would attack these particular zones and attack it based on the session that you're in. If you were to break down what your stop loss and take profit would be at various levels, this current gold hourly chart shows. Well, you look at the current hourly chart, where's your stop loss, right? Where's my stop loss going to be? It's going to be below this, or it's going to be below this, right? But my thing is here on this hourly chart, where's my target? I have to do the math and I have to figure out what my target's going to be. Like right now, I don't see a target with gold because this zone is too close to this zone. And look at the way the candles have formed. Price is rejecting here. How can I have a target if price is rejecting? Like, what do I do? What do I do here? How would you trade this? Like, I want people to explain to me, how would I trade this right now? Where is there a trade? There's no trade. This is the biggest mistake people make. Is they're like, well, the hour is forming a support, and I just think that we're going to go up here. How? Tell me how we're going up there. What is happening? So you're telling me that you're blindly going to take a trade, put your stop loss here, and then you're just going to enter over here and then just ride all this over here and then hope it does this? Why wouldn't you wait for something to form in the way of this? Like there's a candle so that, you can start to see it do this, so that eventually that candle then turns into something like this, right? And then when the candle is looking like that, where the body is starting to form and we're getting the actual body of the candle, then you can say, okay, hey, look, we're probably going to hit this target now, and this is my new support because we're starting to move up. Part of trading is visualizing what you're expecting to see happen and how you expect it to happen. This is nothing. This is just a range, right? So what I have to do is I have to wait and I have to say, okay, what's happening in the next hour candle? If this hour candle comes back up to here, I know that there's going to be a pullback for the next hour candle, and then we're going to drive up. What if this hour candle in the next 5 minutes drives up to here? Then I know there's no trade either because I missed it, because it drove up and then it's going to exhaust again, right? So these are all different areas of confluence and different ideas you have to process all at the exact same time. You have to be able to do multiple variations. Like if you watched Avengers and Doctor Strange, you know how many different outcomes he saw? He saw like millions of outcomes. You have to be Doctor Strange on the charts. You have to be able to process hundreds of possible outcomes within seconds. And that only comes with experience, trading one pair, and also chart time. In front of the charts, seeing how candles move at particular instances, whether it's the beginning of the hour, the middle of the hour, and the end of the hour. You have to define those characteristics of the pair that you're trading, and you have to see how it reacts. You also have to understand where we are in the session, right? We're coming towards the New York stock market open. Gold is very heavily correlated with the stock market. So we know that something's happening right now with gold as we're a half an hour away from the New York Stock Exchange open. So you have to be able to correlate all those things together. That's why I'm saying trading is very, very difficult if all you're going to do is sit here and say, all you're going to say is, what if? What if? Well, what if this? What if that? What if this? No, there's no what ifs. You have to map out plans and you have to execute and see based on that execution what happened with your ideas, because trading the market is fluid. You have to adapt. You have to be able to say, hey, this was my target. Why was this my target? Because it's been struggling over here, over here, over here. It's been struggling. You have to be able to identify that instantly. That has to be like a no-brainer. That has to be something that you innately know that this has to be my target, not up over here. Like this hour candle is not going to just fly up over here in 1 hour. It's just, you know, it happens, but not enough to say that it's a regular occurrence. The problem is people are so constricted with the way they trade because they feel that if they do this, if they have this magical formula, that formula will carry them every day. And the idea is to have a set of rules that you can apply to different scenarios, right? So if you map out rules and you give yourself options, then trading becomes easier because you can say, hey, this is a scenario where I can apply rule 1, 2, 3, 4. This is a scenario where I can apply rule 5, 6, 7. That's what you have to be doing. What people are looking for is they're saying, well, every time I trade, I have a 10 pip stop loss and a 20 pip gain. It's not going to happen that way. Maybe you're going to have a 10 pip gain and a 5 pip stop loss. Maybe you're going to have a 5 pip gain with a 2 pip stop loss. Like, if you're fluid enough and you're able to map out those ideas, you're going to see that the price is going to push and it's going to give you opportunities in that way. And the thing is, people are just not adapting to that. They're trying to create a box where they say, well, this is what's going to happen because of this, this, and this. And I think that we're just going to have a 30 pip gain with a 10 pip stop loss every single time. And it's not going to work that way. You're going to lose more than you're going to win. Because like you look at right now with gold, you see the hour chart, right? So this hour candle is now pushed up. So people are like, oh, we should take buys now because it's going bullish. And I'd be sitting here going, are you sure? Because we're in that same area here. So I'm looking at that going, this candle is scary to me because we don't have a rejection point that would point to go further up. So for me, I stay out of this. If I was still in the trade over here, if I was still in the trade from over here, I would love this candle and I would hope this candle would continue going up. If I'm not in the trade, I'm not taking the trade at this point because I don't see a rejection point to say that, hey, we're going to continue moving up. Now, if I want to be aggressive, what I'll be doing is I'll be looking at maybe a higher time frame and saying, oh, maybe this is now going to just continue here so I can take a trade in here and go up to that level there. Maybe I'll do that, right? Or maybe I'll believe that, hey, once we break this point here, I can then take a trade to go back up to here. But the thing is, what it comes down to is if I take a trade right now, right here, my stop loss has to be almost here because this could pull all the way back before it goes all the way back up again. So do I really want to be a part of that? That's what you have to ask. Right? So you have to understand what makes the most sense for you and also your comfort level. For me, because I already took a trade, this is not a good comfort level for me. I don't like the way this candle's forming. I don't care that it went up here, but it didn't break this level. So I know right away that this is a key level. But what I can start doing now is I can start dropping into the smaller time frames and saying to myself, okay, it looks like we may have a breakout probably towards the New York market open, the NYSE open. So maybe I'm going to start hunting trades on a smaller time frame, being aware that this could break out because of the way the candle's forming. But maybe I have to look to take trades when it pulls all the way back over here and place a pending order to go further up afterwards. So now I'm waiting for this candle to pull back on the smaller time frames to then maybe take a trade to push further up at that point. And then where's my target? My target is here. Now, why is my target over here now? Because what I'm seeing is that this area here is going to be breaking soon. So now I start mapping out my future target. So my future target is going to probably be in this zone here. The zone is wide, so I have to be very cautious that this candle could pop up just right to this level here and then just drop again. So I have to be very, very cognizant of that, and I have to be on the trigger to say, okay, on the smaller time frames, we're starting to create a resistance level here, and we're starting to go down. Not, oh, the hour candle is just pulling back. Maybe the hour candle pulls back now to drive all the way down. We don't know that. And that's what you're doing when you're trading these ranges, is you're saying to yourself, okay, as we start to push, you know, what am I looking for? What am I looking for at this point? I'm looking to break through this first zone here, and then I'm breaking through this zone. I'm more comfortable in this area over here, because you can see here, these wicks are gone now, and we're just plowing all the way up. So now you can start to say to yourself, if this candle now breaks up, this is our first target over here, right? Because now we're at 1467. Our next target, 1469, and then potentially 1474. So that's what you're looking at. Okay, so that's what you're looking for, and now you can start to say, hey, on the smaller time frames, if we break the 15-minute resistance that we're coming at right now, there's a good possibility that we're going to break all the way up as we go to 1469. So there's a good chance right now. So if you're in a trade on your 15-minute time frame, you're probably holding at 1464, 1465 as a stop loss, and 1469 is your target. So this trade will probably run right into that zone now. But if you're already taking the trade from over here, you don't need to worry about this trade here. This would be if you hadn't taken a trade yet, because what you don't want to do is you don't want to give away your profits that you just did. You just did a 20 pip trade here or a 15 pip trade. You don't need to worry about this trade now, because you already got profit in the one over here. The idea now is to say to yourself, how are we going to map ourselves out of these trades? Like I said, see how this 1 hour candle is forming now? That doesn't mean that we're going bearish. It just means that there could be a pullback, and that means the 15-minute candle is going to go and start like this and then fill the rest of that. So I mean, it's just something to keep in mind. Is it fair to assume that on gold will create a lower wick? Okay, yeah, I answered that. Now on lower time frames as rejecting resistance, well, all it did was it just popped out of the zone on, like you can see here, all it did was it broke through that zone, right? So if we mapped out this zone here and we said this was our zone, all it did was pop out. So it's something that we talked about in the last hour candle, that the last hour candle finished over here and this hour candle popped into that zone. So you can see where you have issues, because the way the candle formed, as we spoke, is there was no bottom wick here. And that's what we needed to go further up. And that's what I was very, very worried about, was that the wick wasn't being formed. So what we have to wait and see is maybe there's going to be a wick that's going to form down over here. But what I can start doing is I can start anticipating a bullish run, and I can start putting new trades over here. So now, because the candle's pulled out of this zone, I can now look to take an entry when this candle goes bullish, but it'll bullish, but more than likely it'll drive through that zone. So that's what I'll wait for. I'll wait for this candle here to then flip. If it flips up, then I'm okay with that. But you can see, based on, you shouldn't be surprised that we failed that zone, right? Because we didn't have the proper liquidity or the wick down on the hourly. This hour candle didn't look like this to go further up, right? So we didn't have a tail at the bottom of the candle, right? We needed a tail here, something like this, to drive up. When the candle has no body and it's going up, usually this is what happens. It drives into the zone and it pulls back away. So we just have to be aware of that. The good thing is now, is even if this candle finishes, say, it finishes something like this candle here, right? So if we look at this candle here, and it finishes with a bullish body and a huge wick, we know the next hour we'll be able to fill that wick because we have momentum up. So what I'd be looking for is I'd be looking for a candle that looks like this. So this candle here, I'd want it to look like that over here. So I'll wait to see how that works. Well, you see, this the thing is here. So now you look at this candle, right? And you say, well, Ted, now we're going bearish. And I tell you, I'm like, it's only one candle. One candle isn't confirmation. Even if this candle drops all the way to here, that doesn't mean we're going bearish, because we have to wait for a couple of candles. If you look at gold, gold seems to move, you know, if it's going to be bearish, it's going to let you know it's going to be bearish. If it's going to be bullish, it's going to let you know it's going to be bullish. So just be patient. You don't have to worry about missing the move or the opportunity. What you have to understand is that we had a lot of bullish momentum all week last week and all yesterday. So like I said, today there might be a little bit of a pullback. But am I looking to take sells? Not really, because I don't want a counter trend. So what I'll do is I'll wait for this to go to buys, and my target is still up over to there at that point. So we just sit back and wait. Can you trade sells? Of course, because what you can say is this is a rejection zone. We rejected this area, and that this is our target. So now your stop loss is going to be above here, and your take profit is going to be here, or even if you want to get frisky, you can go down to there, or ultimate frisky right there. But these targets here and here will show themselves when you're at this point here. Okay, you will see as we drive through this zone that this will be the first one, and if we're going hard in this area here, if we're dropping down hard, you know that this is your next target. So it's just something to keep in mind, that if gold's going to move down, you're going to have enough notification to take a sell on gold and get from 1463 to 1460. You will have enough information. If it's going to be a buy, you're going to have enough information from 1469 to 1474. You should not ever panic that you're missing a move on gold. Gold gives away its hand all the time. It always tells you what's happening. And what did we know? This was our support. And now, see the way the hourly has changed on gold? I like that. That is what I'm looking at now, the hourly. Because now the hourly is creating a new support over here. So now we just have to wait around here, and we have to determine if we're just going to get that spike up. Because now the next 30-minute candle, we could potentially take buys to fill this range at 9:30. So remember we were talking about that hour candle and now how it's flipping? That's what we're looking at.
Yes.
So gold now, that's I think the momentum we need to go up the rest of the day.
Yep. John Dillery joined. Yes. John Dillery is in Ireland.
Yeah, it held that 5 minute or 200 EMA held perfectly a couple
Yep.
times back.
Yep. And now if you look at the 15-minute candle, we're on our way up.
Yeah, beautiful.
Break through that. We should break through that resistance hopefully.
Wow. GP CAD also played out.
Yeah, that 30 minute looks like a wick to just rock it up.
Yeah.
Rock it up.
Yeah, this 30-minute candle will flip bullish and then we should be good. We should at least fill the previous 30-minute candle to like 1468 with gold. We should at least get to 1468. That's the initial target.
Have fun. Take care.
Good doing, man.
Yeah. Take care. Have fun.
Enjoy.
Have a blessed one, Roger.
Have fun. Take care. Have a blessed one.